Hi and a very good morning to our beloved lecturer Madam Nurazlina and our classmates. Today we're going to present our problem-based case study for company Pantech Group Holdings Berhad. Hope you enjoy this video.
Intim Zuleika binti Kamaralzaman, Hanisa binti Hashim, Nur Imanina binti Zalani, Nur Shafira binti Mamat, Siti Nur Najiha binti Muhammad Julkifli.
Hi, Assalamualaikum. My name is Siti Nur Najiha binti Muhammad Julkifli and I'm from BA 2425A. Pantech was founded in 1988 and based in Kuala Lumpur, Malaysia. Pantech Group Holdings Berhad is engaged in investment holding and provision of management services. Pantech has three segments which is engaged in trading, supply and stocking of high-pressure seamless and specialized steel pipes, fittings, flanges, valves and other related products for use in the oil and gas reticulation, marine, onshore and offshore, heavy engineering, power generation, petrochemical, palm oil, refining and other related industry.
Assalamualaikum, my name is Nur Imanina. I would like to present about industry analysis of Pantech Group Holdings in Berhad. So, an analysis towards the industry is a tool to facilitate companies' understanding of its position relative to their competitors that produce the same or similar products and services. So, it is important to understand the forces at work in the overall industry to gain an effective strategic planning. So, an industry analysis consists of three major elements. The first major element of industrial analysis is the underlying forces at work in the industry. The rivalry among firms in the industry are depending on five forces, which is the first forces, the potential for new competitors to enter the market. The second is the bargaining power of buyers. Third, the bargaining power of suppliers. Next, the availability of substitute goods. And last, the competitors and nature of competition. So, those five are the forces of rivalry among firms in the industry. Therefore, the company should focus on these five forces when making an industrial analysis. For example, according to the fifth force of rivalry, which is Pantech Group Holdings Berhad, must be aware of their competitors. So one of the core businesses is manufacturing plumbing and heating equipment and supplies. So who should they be aware of? So some of them are Chengdu Tianjin Technology, Mtech Programmable Power, Heman Power Solutions, and MMI. The next major element of industrial analysis is the overall attractiveness of the company. In order to determine the attractiveness of an industry, it is important to work with business brokers in order to analyze the five forces of industry, which are the first is the buyer, which is the buyer will determine the power of industry since they can choose the best company to buy with according to their budgets and tastes. Second is suppliers, which is to find the best suppliers that offers a high quality product with an affordable price. And then third, substitutes, which is the if consumer can easily substitute their product, the industry will face a high risk of losing some of their customers. And next is the rivals, which is the most central factor in the five forces due to all other factors will impact their competitive rivalry. And lastly, the threat of a new entrant, which is a large number of competitors will lead to lower profitability across the industry, which will lower the attractiveness of the industry. Finally, the major element of industrial analysis is the critical factors that determine a company's success within the industry. So to become a successful industry, there are 5 success factors, which are the first one is strategy focus, which content of leadership, management, planning. Second is about people, which contain personnel, staff, learning, development. Third is operation, which contain processes and work. Next is about marketing, which contain customer relations, sales and responsiveness. And lastly is about finance, which contain assets, facilities and equipment. So to conclude, 3 are the major element of the industry analysis that need to be done by any industry when conducting an analysis of their company. To avoid any mistakes during the analysis, we would like to suggest on hiring someone that has a lot of experience in making the industrial analysis. So that's all from me. Thank you. I will pass to the next presenter.
Next, we discussed Pantech Group strategy analysis. The goal of the strategic planning is to find out how Pantech Group can use its strengths, core competencies, and strategic advantages to take advantage of good opportunities in the miscellaneous fabricated products industry and in the world as a whole. Firstly, market penetration. A market penetration strategy is basically a strategy for getting a bigger share of the market. Next, product development. The research and development department needs to be strong for the company's plan to develop new products to work. Last but not least, market development. A growth strategy that involves selling your existing products or services to a new group of customers. Lastly, diversification. Changing the design of the packaging, advertising the different ways the product can be used, etc.
Hi and Assalamualaikum everyone. Today I'm going to present to you the financial ratio analysis of Pantech Group Holdings Berhad. This section presents the findings of our data analysis. This section is divided into 4 parts. To begin, we examine Pantech Group's liquidity performance from 2017 until 2021. Then, we look through the company's asset management issue. Third, we demonstrate the company's success profitability. Fourth, we discuss debt management. Firstly, liquidity performance. For the current ratio, we can see that there is a slight increase from 2017 and 2018. Then, in 2019, the current ratio decreased, and there is a major increase from 2020 until 2021. For the quick ratio, we can see that there is a slight increase from 2017 to 2018. Then in 2019, the current ratio decreased, and there is a major increase from 2020 until 2021. Secondly, activity ratio performance. For account receivable turnover, we can see that there is an increased trend from 2017 until 2020. However, in 2021, the ratio decreased. For the average collection period, 2018 has the fewest number of days. It implies that Pantech Group Holdings has a several average collection term during the past 5 years. As an average collection period of 60 days or less is normally preferred.
For inventory turnover from 2017 to 2018, the ratio increased. However, from 2019 until 2021, the ratio decreased. For fixed asset turnover, there is a slight increase from 2017 to 2018. However, from 2019 until 2021, the ratio decreased. For total asset turnover, there is a slight increase from 2017 and to 2018. However, from 2019 until 2021, the ratio decreased. Thirdly, profitability ratio performance. For gross profit margin, the ratio fluctuates from 2017 until 2019. Then the ratio shows a slight increase from 2020 until 2021. For net profit margin, There is an increased trend from 2017 until 2019. However, the ratio decreased from 2020 until 2021. For return on total assets, there is an increasing trend from 2017 to 2018. However, the ratio decreased from 2019 until 2021. For return on common equity, there is an increasing trend from 2017 until 2019. However, the ratio decreased from 2020 until 2021. Lastly, debt management ratio performance. For debt ratio, the ratio fluctuates from 2017 until 2020. Then, the ratio shows a slight decrease from 2020 to 2021. For time interest earned, the ratio increased from 2017 to 2018. However, from 2019 to 2020, the ratio showed a slight decrease, and in 2021, the ratio increased. I think that's all from me. Thank you.
Hi, I'm Hanisa. So next we're gonna talk about comparative analysis for the Pantech Group Holdings near Berhad. Comparative analysis is a type of financial analysis called year-to-year, can be used to compare time series data by using balance sheets and income statement. We can identify changes in the amount or quality of a company factors using year-to-year analysis. In order to determine whether financial instruments are performing as expected, investors often monitor the performance of financial instruments year after year. This approach is highly useful for identifying growth trends and patterns. Since year-to-year comparison helps to reduce volatility, which can affect most organizations, they are crucial for analyzing a company's success. Since most business sectors experience in high season and low season, sales, profitability, and other financial indicators fluctuate throughout the year. So now we move to year-to-year changes of balance sheets. And the first one we can see here is assets. The table shows the comparative analysis for year changes of balance sheets for Pantech Group Holdings and Berhad. For the year 2017, the changes of total assets are 9.86%. This can be explained by the items in non-current and current assets. Total non-current assets changes are 9.63% from year 2016 to 2017. There is a massive increment in capital work in progress for the year 2016 to 2017, which is 80,305,082 ringgit. The increasing number is coming from prepaid and lease payment and also capital work in progress. But the changes in 2021 showed a decreasing pattern where the changes to negative figures were about negative 1.30%. This is because the prepaid and lease payment are non-existent and also going on acquisition is changed to new company. Total asset for year 2018 to 2019 is 12.8%. For the year 2018 and 2019, there are increasing pattern of non-current asset about 6.8%. While for total current assets are 15.9%. Inventories in current assets items play a big role in these changes. For year 2020 and 2021, changes for total non-current assets are negative 1.3%, while for total current assets are 0.5%, which leads total asset changes to negative 0.2%. Next, move to equity and liabilities. Total equity for year 2016 to 2017 are 4.63% for the year. 2018 and 2019 changes of total equity are 6.0% which is higher than changes of previous year. But for the year 2020 to 2021, it went down again to 2.4% due to decreasing value in reserve. Total liabilities of year 2016 and 2017 is 22.47%. This can be explained from current liabilities and non-current liabilities. Total current liabilities for year 2016 and 2017 changes are 24.95% and increased to 32.1% for year changes 2018 and 2019, but not for year 2020 and 2021, went down to negative 6.9%. Finally, total equity and liabilities 2016 and 2017 is 9.86% and up to 12.8% for year 2018 and 2019. For year 2020 and 2021, the changes of total equity and liabilities are negative 0.2% due to trade payable low values and also borrowings. Next, we move to the table year-to-year changes of income statement. According to the table shown, year-to-year changes of income statement for company Pantech Group Holdings Sdn Berhad. Gross profit made by Pantech Group Holdings Sdn Berhad in year 2016 and 2017 changes to negative 14.4%, which are facing losses. This is because the company got less revenue from previous year. Same goes to year 2018 and 2019, a negative figure are seen by negative 2.5% caused by less revenue from previous year. Next, in year 2020 and 2021, total loss are negative 13.0% caused by decreasing value of revenue. Profits from operations also lead to negative figures in year 2016 and 2017, which is negative 26.7%. For the year 2018 to 2019, it shows a progressive movement to 3.0% of profit from operations, but in the year 2020 and 2021, it turns down as well to negative 21.6%. The last item is that expenses is decreasing to 29.4% in year 2016 to the year 2017. But for year 2018 to the year 2019, it shows a little increase in value to 7.1%. Meanwhile, in year 2020 to 2021, the expenses as negative 4.7%. So, profit for the financial year in year 2016 to 2017 shows a decreasing pattern, negative 25.1%, while for the year 2018 to 2019, a slightly difference are seen, which is 3.9% due to positive profit made. But for the year 2020 to 2021, the profit made are decreasing, which led the profit for the financial year to decrease to negative 26.5%.
Assalamualaikum. My name is Indah Zulaika. So today I will talk about the common size analysis of the Pantech Group Holdings Berhad. So we will start with the common size analysis of the balance sheet. So referring to the above table, we can say that the total assets of the Pantech Group Holdings Berhad has inconsistent trend throughout the 5 years ranging from 2017 to 2021. This can be seen in the non-current and also current items. And the total of the non-current asset shows the decreased percentage from 2017 to 2019. However, in 2020, the percentage has increased slightly to 38.99% and decreased again in 2021 to 38.57%. The total of the current assets also shows the inconsistency as the percentage increased in 2018 compared to 2017, however, decreased in 2019 and increased again in 2021. In 2017 till 2019, the inventories holds the biggest percentage. However, in 2020 and 2021, the property, plant and equipment holds the biggest percentage. The current trade receivable has decreased consistently for 4 years from 2018 to 2021. Furthermore, the total equity of Pantech Group Holdings Berhad shows an increase from year 2017 to 2018 and slightly decreased in year 2019. However, the percentage has risen again from year 2019 to 2021. The equity attributable to owners of the company holds the largest percentage of the total equity. The trend can be seen to be inconsistent for 5 years from 2017 to 2021. Other than that, Pantech Group Holdings Berhad also has a consistent decreasing percentage of cash flow hedge reserve and warrants reserve for 5 years. Next, the percentage for employees' share option reserve has increased steadily from year 2017 till 2021. Meanwhile, the total liabilities for Pantech Group Holdings Berhad have decreased from 32.66% to 30.01% in 2018. However, the percentage has increased in 2019 and decreased again in year 2020 till 2021. Looking at the percentage of the trade payables, it shows a significant decrease in 2018, which is 3.92% from 8.11% in 2017. The percentage continues to decline until year 2021. Other than that, the borrowings have decreased from 2017 to 2018. However, it increased to 21.58% in 2019 and continues to decrease in the following year. Next is the common size analysis of the income statement. Above table shows the common size analysis of income statement where the revenues were used as the basis. From the table, the cost of sales holds the largest percentage where there is inconsistent trend from 2017 to 2021. The cost of sale in year 2020 was the largest, which is 78.99% compared to another year between 2017 and 2021. Next, the selling and distribution expenses increased to 3.81% in 2018. However, it went decreased to 3.14% in 2019 and continues to increase again in the following year 2020 and 2021. Furthermore, the finance cost of the company has increased steadily from 2017 until 2020. However, the percentage has slightly decreased to 1.41% in 2021. Meanwhile, the profit before tax increased steadily in year 2017 to 2019. However, it went decreased to 7.64% in year 2020 and 7.41% in 2021. The net profit of Pantech Group Holdings Berhad has been increased consistently from 2017 to 2019. However, the percentage of the net profit has slightly declined in 2020 to 5.97% compared to the previous year, which is 7.79%. The percentage continues to decline in the following year to 5.44%.
Next, we move on to cash flow analysis. First, let we see the net cash flow from operating activities is increasing rapidly from the year 2017 to 2021. It means that there are more cash inflows than cash outflows. This is because the company is successful in generating much cash and revenue from its operation. However, in 2019, the company is incurring more cash outflow in where it's dropped to negative value because the company is using a bigger amounts of cash to pay for the supplier and also employees. But then, in 2020, the net cash increasing again, which means that this company is incurring more cash inflows. Thus, this indicates that there is an improvement of cash position in the company and the company begins to generate more income and revenue from its operating activities. For the net cash flow from investing activities, it is in negative value over the 5 years. And this is because the company is spent more on their property, plant, and equipment, including their intangible assets. In 2017 and 2018, the net cash flow from financing activities are in negative values, where the financing of the company is poor. However, in 2019, the company is incurring more cash inflows as the company is paying its short-term loan in big amount, but then decrease again in 2020 and 2021 indicates that the company is incurring more cash outflows due to pay their short-term borrowings. The net changes in cash and cash equivalent for the year 2018 and 2019 are in negative value due to the company ineffective planning. However, they managed to increase it again in 2020 and 2021. Thus, this indicates that the company has been in a good position and managed well in their operating, investing, and financing activities.
Referring to Pantech Group Holdings Berhad's financial ratio, comparative, common size, and cash flow analyses for five consecutive years, 2017, 2018, 2019, 2020, and 2021, we may finish our analysis. Many factors can be studied using Pantech Group Holdings Berhad's financial ratio analysis, comparative analysis, common size analysis, and cash flow analysis. First, Pantech Group Holdings Berhad was liquidated from 2017 to 2021. It means the corporation can turn assets into cash. Next, Pantech Group Holdings Berhad's activity ratio demonstrates they weren't efficient with their assets. The company's profitability ratio demonstrates that it's not using its assets well to generate money. The company's debt management ratio shows it can meet interest payment commitments and financial concerns. Pantech Group Holdings Berhad should review its debt practices. The company's 5-year average collection timeframe reveals they take a long time to collect from creditors. Pantech Group Holdings Berhad's financial management is good.